Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, today we're gonna talk about how much trouble Opendoor is really in. And I'm gonna show you guys how much real estate they actually own just in my local housing market, which is almost $250 million in just my local housing market, which is absolutely shocking. And as you guys know, Opendoor has continued to take an absolute beating. They are essentially an institutional investor that purchase homes to flip for profit. And now that the housing market is crashing, Opendoor is now stuck with billions of dollars of homes. And remember, they have to pay taxes on every single one of those homes, along with HOA fees and other fees of that nature. And this is on top of the massive lawsuit that they just lost. And I believe the fine was $62 million. And on top of that, their stock right now is completely gutted. Okay. Not only that, you guys, there is a huge shakeup of leadership within Opendoor. And I believe that within 1 year, Opendoor is going to file for bankruptcy protection, and it's going to be especially interesting to see how many homes they have to sell for well under market value for them to stay afloat. But not only that, guys, towards the end of this video, I'm going to show you a special link that Opendoor has created to give us additional price breaks on homes that they're keeping off the market. So yes, that's right. They have so many homes right now. They're keeping some of those homes off the market and giving us an additional price cut on those homes. In other words, you guys, Opendoor right now is all messed up and affixing to fire sale properties. And we may want to pay attention to that because we may be able to get one of those houses for pennies on the dollar. And that's what today's video is going to be about, guys. Do me a favor, understand this is my personal YouTube channel. Like the video for me, subscribe if you haven't, shoot me a comment below, hit notifications, but either way, let's start. So where we're going to start is by accessing this Yahoo article. And then after this, I'm going to access my local MLS to show you guys how much property that they have in my local housing market. And then we'll go to their site and I'll show you that special link. The name of the article is When One Door Closes, Opendoor CEO Eric Wu Steps Down. CFO Kerry Wheeler stepped in as the new chief executive. The article goes on. Opendoor co-founder Eric Wu announced today that he is stepping down from his role as CEO of the real estate technology company and that Kerry Wheeler will be taking over as chief executive. In a blog post, Wu said that he will transition to serving as president of Marketplace. Wheeler has served as chief financial officer of Opendoor since September of 2020. And announcing this shift, Wu wrote, "First, I believe that an important driver of shareholder value is the discovery and refinement of product market fit. And what I want to spend my days and nights and weekends on is delivering products that address consumer needs." Yeah, right. You mean his needs? Second, and most importantly, I've spent countless hours with Kerry, and I know she is the leader and executive Opendoor needs. Well, they definitely need something because what they're doing right now ain't working. They are losing so much money. It's honestly, it's hard to fathom. I don't even know how they're in business right now. They have so much liability right now. Opendoor is going down. They will file bankruptcy. I see that happening in 2023 because they are stuck and trapped with all these houses. Flippers right now are getting massacred, and Opendoor is the biggest flipper in the world, probably, right? Biggest flipper in the world. They're going to go down fast and hard, and it's probably going to change some laws. And actually, here's the thing I think is possible. I think as a result of the Opendoor catastrophe, I think it's going to bring Republicans, Democrats together so that they pass more laws to curb all of this institutional investing nightmare that we have going on right now in our housing market. It's not fair. They need to stay out of our housing market and leave us alone, right? I don't even care at this point. Shut them all down. I don't even care if I invest, right? I'll sacrifice my own desire to invest. If this crap changes, it needs to change. This is bad. Let's get back into the article. Now, this is crazy, guys. This is something new from Opendoor. They're listing houses not on MLS. They're keeping it on their website and selling for additional price cuts. Let me show you. In early November, Opendoor launched a new marketplace called open door exclusives in its Dallas, Fort Worth, and Austin areas. At the time, we said we've designed open door exclusives to be a new market where you can directly buy and sell a home without any of the hassle of the traditional real estate model. So they want to remove realtors. They want to remove realtors, which again, I understand that a lot of realtors, they do a bit, bad job, but the good realtors do a great job, and we need people doing great jobs, right? Not bad, crappy jobs. Anyways, we are doing this by leveraging our 9 years as a leading buyer and seller of homes, opening our platform and services, and aiming to bring together hundreds of thousands of our home sellers and home buyers. Today marks a founding moment as we expand our vision to service all home buyers and homeowners and aim to redefine the real estate transaction forever. And I hope that's in the place of the government passing new laws to get them out of the market. The move comes after a tremendous year for Opendoor. On November 2nd, Opendoor announced it was letting go of 550 people, or 18% of the company across all functions. At that time, Wu said his company was navigating one of the most challenging real estate markets in 40 years. So they want to change the landscaping forever. And again, let's just hope that comes in the form of legislation to shut companies like them down. One more part of the article that I'm going to read, guys, and then we're going to start going over the really meaty stuff, like how much property do they own in my local market? Let's put $1 on that. And then let's check out the exclusive offers they have on their website. But first, let's finish out the article, because this is going to show us how bad a shape Opendoor really is in and why I expect them to go into bankruptcy next year. Meanwhile, the company's stock has taken a massive hit. Opendoor went public in late December 2020 after completing its planned merger with the SPAC. The 8-year-old company closed its first day of trading on the Nasdaq Stock Exchange at my gosh, you guys, $31, well above the $10 share price at which Social Capital sold its shares in April 2020 initial public offering. At the time of writing today, shares were trading at $1.76. You guys, it went from $31 to $1.76. Essentially, if you invested, your money's wiped out. You invest in Opendoor, gone. Your money is gone, right? And so is their money, by the way. Only slightly higher than the company's 52-week low of $1.46. This means that the company is valued at just $1.1 billion, down from a valuation of $8 billion. You guys, my gosh, $8 billion in 2021. And I'm going to tell you, this value is going down because their expenses are going up, their liability is going up, and prices are going down. This is dwindling. Tell me they're not going to file bankruptcy. Convince me if they're not going to file bankruptcy. And that's not all, you guys. Look at this. In August, Opendoor agreed to pay $62 million to settle charges by the Federal Trade Commission, which said the company's claims that it helps people make more money by selling their home to the company rather than listing it on the market were deceptive. They were proven to be deceptive, you guys. Opendoor is fooling us. Opendoor is fooling us. The Federal Trade Commission took them to court. They lost. They settled. Crazy. When it comes to venture capital, Opendoor last raised $300 million at a $3.5 billion pre-money valuation in March 2019. Over time, it has raised about $1.3 billion in equity funding and nearly $3 billion in debt financing to finance its home purchases. So this debt, that $3 billion in debt right now, I bet that they have horrible interest rates. Their interest rates may be adjusting. I mean, this is insane. I don't even know what to say. If you think that they're not going to go into bankruptcy, tell me why. Why are they going to be okay? Let me show you now how many houses they just own in my market. Just Houston. Okay, we're just going to look at the Houston area and see how much homes Opendoor owns, and we're going to put a value on that. Take a look. It's shocking. This is from HAR. This is what we're looking at. This is Opendoor right here. And this guy, this one rep, has 600. You guys, listen to me. In my local market in Houston, this is shocking. They have 688 listings in just my local housing market. So if we take the 688 listings, let's put a dollar amount on that by determining what the median sales price is in Houston. So as we see right here, guys, the median sales price in Houston is $312,000. So what we do is pretty simple. We're going to take the 688 units that they have. We're going to multiply it by the median sales price of $312,000. That equals, in just my housing market, okay, Just my one housing market, they have roughly, you guys, $214 million in property, roughly, in my local housing market. Do y'all know how much property taxes are in Houston? My property taxes on my house is 3.52. Let's just estimate their property taxes is going to be 2.5. All right. So what I do is I times this, because remember, they got to pay property taxes. Let's see how much property taxes are at 2.5%. So I'm going to time this by times 0.025. Boom. Look at that. 5. You guys, this is crazy. In January, okay, so when the tax bills are due in January, Opendoor, who's only worth about $1 billion now, has to pay roughly $5 million in just property taxes in just Houston. Do y'all see? Do y'all see what's going to happen? So again, if you're on the sidelines, this is good news. Keep watching Opendoor. We're probably going to get some crazy deals. Now, I just really want to mention this one more time. That $220 million was only including active inventory. Okay, that's just active listed on MLS inventory. Opendoor has a whole bunch more homes that are not even on MLS, and they're telling us that if we buy this through them, that they're going to give us an additional break because we're going to avoid basically using realtors. Take a look at this now. We're going to access Opendoor exclusive offers. This will be in my description if you guys want to take a look for yourself. This is Opendoor exclusives. Let's see all homes right now. I'm going to drop down this to Houston because this is my local housing market, but I want to show, let's start at this one. So they're saying that if you purchase this home off market, they're going to give you an additional price cut of about $7,000. The thing is, guys, the commission is 6%. 6% of $250,000 is $15,000. Where's the rest of the money from the commission that they're saving? Didn't they say they want to help homeowners forever? You see the nonsense here? They want to help themselves forever and forever change to how they make money. But look at this. These aren't even on the market, you guys. How many houses does Opendoor have? You guys, look at this. Look at this. This is just in Houston. They already have 688 active listings. What are these? There's more. These aren't even on MLS, you guys. How many houses do they own? My gosh, they're trapped. Look at this. They are trapped. They can't even put these on the market. There's not even a sales price. Look at this. This is a huge list. This is insane, you guys. My gosh. I mean, absolutely shocking. I mean, absolutely shocking here, guys. Now, in conclusion, if you want to find the deal of a lifetime, the deal of your dreams, it might be a good idea for you to start following Opendoor just to see what you can get away with if you put an offer on a house, as far as negotiating. Now, right now, you can find off-market homes from Opendoor that appear to be a little bit under market value. But personally, I'm going to wait because I want to see Opendoor blood on the street before acting on these properties. And once the bankruptcy window opens, that's going to be the time for us to start purchasing homes from Opendoor at well under market value. And one more thing that I really, really hope in the future, that these types of things will never happen again. These investors, big, small, flip investors, rental home investors, are absolutely destroying the housing market, especially for all of the natives and potential first-time homebuyers. The real estate market, guys, has turned into a cheap swap meet. And that's bad. That is very bad, you guys. Now, here's the good news. With a little bit of empowerment, you guys, with a little bit of discipline, you guys can become winners on the other side of this thing. So much so, we're gonna bail out. Well, the thing is our tax money may bail these people out, but I was gonna say we can bail them out by purchasing some of these fire sale properties, giving them back liquidity. But this is just crazy. Opendoor is going down, you guys. As a result of them going down, we're going to get the deals of our lifetimes. And mark my words, that happens in 2023. Now, other than that, I really hope you guys got some value, insights, and perspective from today's video. If you're out there investing in real estate, I wish you luck and I hope you win.